Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody. Let's take a look again on the cryptocurrencies, particularly on the Bitcoin, and see what performance market shows. Actually, very nice upward action that we have got in the recent few weeks. That was different reasons for that. As you know, some relief investors have got from the solutions around FTX bankruptcy, so it was found that some amount of cash, it was rather big amount. We have covered it in the Telegram. That some brings some positivity on the markets. Also, some additional news have been released concerning the subject of the different companies. And on this background, Bitcoin has got the positive and bullish boost, and you can see that it's turning to the upside action. Overall background on the economical sphere in the United States also looks more or less positive. So investors are arguing about the sources of the inflation decrease. The job market stands relatively stable. The only some negative have come from the retail sales last week, but that was were forgotten really fast. And as you can see, the specific of the human mind is that some bad things for getting faster, but the good things remain in the mind longer, and that also makes an effect, and you can see this performance. So all this stuff, it doesn't mean that we're really taking an idea of that. So we have discussed in our weekly reports in the gold market and the forex market, all background on the economy, United States, particularly speaking, the job market within the recent couple of weeks. In the previous report, we have taken a look why we'll see some inconsistency between the different data and why we think that the non-farm payrolls soon should start decreasing. In the last report, we have considered PPI numbers and inflation, and we have shown that the source of the inflation decrease is not an improvement in the economy, not because it turned into the upward growth, but because it is just slowing and demand is falling. People are losing their wealth and savings, taking more loans, and so that leads to contraction of the consumption, which you can see actually in retail sales, and that triggers some disinflationary background. Besides other reasons why we have a bit some doubts on concerning inflation, that take a look at some specific indicators. For example, on the copper price, which is usually a very great indicator of the inflation. You could take a look at the rent. That is not really falling currently, and also we have pointed in the report few thoughts from the big analysts, from the BlackRock, from the if you had not missed something, it probably was Goldman, but maybe some other big banks. So all of them are worried and warned about longer term inflation, and they suggest that current running into the bond market where yields are dropping, it's too early decision. So very soon it could start the opposite action. And yesterday in the gold report, it was really interesting subject of the Fed problems and United States Treasury problems that have limited sources to support liquidity, and they can't place enough new debt in the market in the way of the bonds, United States Treasury bonds. So all this stuff is really takes big risks, and currently we are not ready to say that the rally that we have on Bitcoin it's something like continuation of this one. But still, with this performance that we have on the monthly chart, this is January, you can see we have some upward action that it's not covered the previous downside swing yet, but still stands relatively good. Here you even could recognize a minor morning star pattern is forming, and that means that theoretically market could show more extended upward retracement in the shape of some ABCD pattern. For example, I do not see any problems if we will see retesting of this solid resistance area. Take a look, this is yearly pivot point, 26.75, and nearest fib level, 27.98, it's very close. So that's approximately the next destination point on a long-term chart where market could try to go. On the lower time frame, on the weekly chart, particular pattern that might be formed here that could lead market to this destination point, it might be the head and shoulders. Currently it's difficult to say where the bottom of the right arm will be, but it seems that right now this market is not at overbought currently, so overbought stands significantly higher. It easily could come to 25 area, where potentially the neckline might be, shows the pullback, and then shows some extension in the way of the ABCD pattern. So that's one of the patterns that might be formed on the weekly chart, because currently I do not see any problems to the market to move slightly higher, just because the daily resistance areas that were standing around these levels mostly have been broken. And the market is not at overbought, so it theoretically could try to keep going high. Maybe it will be sloped head and shoulders, something of that sort. So it's maybe a bit sloped neckline. We will see, but in general, that's one of the patterns that you could monitor, that could give you the great assistance and key to where the market could go. And the ABCD pattern, you could set the target, estimate the target. So this will be very helpful if it will be really formed. On the lower time frame on the daily chart, let's take a look. The previous hour suggestion of the head and shoulders right there. So remember we talked about this possible left shoulder, head, right shoulder. From these points is currently not been realized yet, but still, let's take a look. Market currently stands around the level where theoretically it still might be. It is its natural resistance around 23 area. Why I'm thinking that in the current circumstance it's more probable starting of the head and shoulders from a higher standing level. Well, the major reason, guys, is because if you remember, around the neckline right there, we had fib level, so maybe even was even confluence, and take a look, this ABC bottom XOP, and that was perfect level to start the bounce to form the head and shoulders. But this hasn't happened. You can see the market has broken through this area and moving higher. Currently, market actually already has broken the important 618 resistance level from this reaction point. From this top to this bottom, that was the 618. And here, between this level and next, between current price and next level, this is relatively free space. So if market has broken important resistance, currently it's not really big chances that we will get deep retracement right from here. Only if maybe some statistics could make impact. For example, gross domestic product, you know, PCE index, that will be the really durable good orders. So all the stuff that we will get this week, maybe only external impact could trigger this pullback. But from the technical point of view, chances that the retracement starts from this point significantly less than it was right there. And from that standpoint, I would suggest that it's more probable that we could get upward continuation somewhere 25 area, where the neckline of the weekly pattern stands, as we just taking a look into it. So that's maybe the left shoulder, head, and right shoulder will be starting somewhere between 25.20 and 25.90. So you can see this is fib level, and it's destination point of the 1618 extension. I draw it as a butterfly, but actually this butterfly usually is not well, butterfly usually forms on the top, so this is not quite a butterfly because it stands on the bottom, but this is just extension of this XA swing. So 1618 extension stands right there. So that will be the next area where potentially retracement could start, market could start forming the hand and shoulders, and that simultaneously might be used as a possible nearest destination, 25.20, 25.90. That's the area where market could go. Besides, take a look, it's also accompanied with the daily overbought. On the lower time frame, we have nice upward action. Current retracement is very slow and gradual. It means that market is well, keeping bullish context. And here you could consider a few levels if you would like to take the long position. So the first one is 22.22. So right there, first level. Second is confluence. 2130 and 2152 as well. These two levels might be considered. So currently trend stands bearish on the 4-hour time frame chart, and the hourly chart also trend stands bearish. But well, you just need to wait how market responds to the levels, and once it will starts turning up once again, and hourly trend will turn bullish, then you could consider this level for possible taking a position if you would like to. So that's actually what we have from the Bitcoin. In two words, short-term context that's bullish, but in the longer term we still have really big doubts that this is major reversal. So just because of the fundamental reasons. So that's what our opinion concerning Bitcoin market.